Okay, so this is part two to the last video. I'm going to do my very best to make this video not an hour and 48 minutes long, but we'll see what happens because I have quite a few things to go through, but hopefully it's not going to be as long. This is going to be part two of the three-part of videos that I'm making answering all the questions that were asked of me. So this video is going to be about what moments in my learning process of all of this defined made like not necessarily defined but everything that I learned that made a significant impact on my trading where I realized something and I went boom, that's I've got to do this. It's going to change things drastically. So I've got a decent list here. I think the best way to do it is for me to go through all of them and then I'm going to break down in further detail. So I'm just going to read through the list I made and then I'm going to go from there afterwards. So these are all the things that I thought were major bullet points of what not to do or what to do, and just things that really defined my learning, my trading, everything. Okay, so first one is focusing solely on one indicator is stupid. Um, the 3/8 EMA cross does not work inside a vacuum. Leaning on the daily chart is important. Um, I'm better at being patient than I am at being nimble. Holding too long is a problem in and of itself. Ignoring anything the stock does till it hits its profit target within reason, obviously, um, and also not ignoring the criteria for exiting for a loss. Certain styles work best under certain conditions. Finding errors through constant journaling helped me develop additional rules. Less is more. Being too rigid will screw you. Over time, you can trust your gut feeling, which is supported by experience, but still needs to be in line with the technicals. How to utilize the cloud. Pay attention to economic events. Religiously stick with your system, no matter what you see another trader do. Um, Experience changes everything. Uniform position size is good for learning, but sizing up helps to create additional nuance. I'm going to show an example later. And finally, understand how options and shares can be utilized in the most efficient way. Okay, so I'm going to break down all of these in detail, at least enough detail that I think is sufficient to understand what I mean by all that. So first off, I'm going to talk about focusing on one indicator is dumb. Okay, so what do I mean by that? So when I first started, I didn't know a lot. So to me, I didn't understand the concept of layering um, probability. I've talked about this in a previous video of mine, but basically what I mean by layering probability is we want many different things that add additional probability. So let's say, for example, that I've got um, LRSI crossing up here, and this is a shit stock, so let me pull up something decent. Um, let's throw up IBM. IBM was strong yesterday, so let's just take a look at that. So let's say I've got LRSI crossing up here. This is the 5-minute chart. That's one layer of probability. Let's say that gives me a 25% probability that this trade's going to work out. I'm just making this up. It's probably not 25%. I don't even know how to quantify the actual percent, but everything adds additional percent. Okay? So let's say that's 25%. And then let's say another percent is the daily chart being good. Okay, we're above the 50 SMA. We're above this random line here. I don't even know how it's drawn. Probably crossing down above those two areas. That doesn't seem pretty significant to me. But regardless, you can tell based off of this, it's after earnings. It gapped up here, had a nice close, it stayed strong all day yesterday, despite the market generally having a downward bias, despite this big bounce here. It did sell off later in the day. But that's another part of the probability. And then um, let me use more indicators because I'm kind of want to talk about indicators here. So let's say Okay, when did I say LRSI is crossing up here? 135. Okay, what's happening on 135? Okay, so we're getting a 1 OP bullish cross here. What that means is these lines are starting to cross up, and that means this is a uh, leading indicator here. So it tells me before the move happens that it's going to bounce up. Now, on this specific example, you do see the hammer off of the low of the day, which is about happening at the same time as the bullish cross. So that is an additional probability. Then on top of that, what do you have here at 135? You also have 10 MO crossing up at the same time. Okay, that's additional probability. Okay, what else do you have? You have, okay, you don't have real relative strength indicator crossing up, but that's okay. You don't necessarily need all the checkboxes, you just need most of them. On top of that, you have on the daily chart LRSI crossing up above 0.2. That's a bullish sign. Okay, so we have, based on everything I just said, we have like 4 indicators showing us that there is additional probability to this trade. Now, if you took this at 135, it wouldn't be that smart because you still need to take in price action into account. So you have all of that. Okay, we've got 210. It's crossing above view up. Okay, not a bad trade. But you get what I'm trying to say. I just pulled this up as a random example, but focusing on one indicator is dumb. This is what I used to do. This was completely wrong. It did not work. It resulted in me losing money. I would look at something like 10MO here on Option Stalker Pro, and I would say, well, okay, I'll just use the exact stock I used to look at a lot. I used to be laser focused on Nvidia. I don't know why. Well, I do know why. It moved a lot. It has a lot of volume. It always moved all over the place, and I don't know why. I just got infatuated with this stock. So anytime it would cross up, or this and 1OP would cross up, I would be like, oh, I gotta go long. And oh my God, I can feel the mental pain inside of me because of how great my losses were doing this. This was in 2022 I was doing this, and my God, it was so stupid. Um, no one ever told me to do that either. I just came up with that and thought it was a good idea, and I did it, and it was so stupid. Okay, moving on. 3/8 cross does not work in a vacuum. What do I mean by that? I prefaced it, or not I prefaced it, but I clarified it by saying not in a vacuum. Because I'll show you why. So let's just look at NVIDIA here. So immediately the day we start selling, so what does that mean? That means, it could be a weak stock. I'm not going to drill into it too hard here because we don't need to spend another hour and 40 minutes on this video. So basically, okay, we're seeing selling. Let's just assume it's relatively weak. I mean, I do, but I don't want to look at it because it's going to create too much bullshit. But anyway, so what you want to look here for is a pullback and a cross back down, blah, blah, blah. You know the deal, or you should. Okay, what happens here? So we cross up. This line here is the 8 EMA, and this line here is the 3 EMA. I hope you can see that. So you can see here that we have a cross up on the EMA, a cross back down. In retrospect, looking at this, you might think, oh, this is the clearest thing ever. Well, I can tell you one thing. I can tell you that these 2 green bars probably created a cross up right here. What does that mean? Okay, that means, okay, if you are only looking at the 3/8 cross as some kind of indicator of when you should take a trade, you'll see that this would probably cross up here before this red bar happened, and then you're like, oh, let me take a long. Maybe this isn't the best example because that would have worked out if you stayed in the trade, but a lot of times this will happen where it prints a red bar and it'll just continue down, which is based on this and based on the daily chart. That's what's more likely here. Now I know all this now, so I'm able to add additional context. But when I first started trading, I looked at these 3/8 crosses and I took them as like a guarantee of what was going to happen. And my God, was that a stupid idea. That just was so dumb. And thankfully, I didn't spend too much time thinking that was the case. But that's another big factor. So one of you know what? I'm gonna say this one first. I am better at being patient than I am at being nimble. So, what I used to do in my trading is I used to be a day trader. That's right. I know I've preached swing trading. That's all I do pretty much now. Well, I used to be a day trader. What would I do? I would see a giant bar on volume and I'd immediately short it. Like 9:35 a.m. 5 minutes after the market opens, I'm in a trade. Um, this method, it's possible to make money on. But the probability is not in your favor. It's very dangerous, and it does not take a lot to create many losses. Um, Not only that, but if your exit is in such a way where um, you're willing to hold it a little bit longer, well, then you might end up bag holding positions that you never should have been in the first place. It's really dangerous. So that's why I stopped doing that, is because I'll give you an example. So in February, no, let's go to the March. In March of 2022, I had done this all of February of 2022, and it worked. And I didn't have that many bags, and actually I didn't really have any. Um, but when I sized up in March of 2022, I started bag holding with it, and honestly, I got so screwed by what I did that I have never revisited. I've briefly revisited day trading in a completely different manner, but I have never seriously revisited day trading since then. Now, of of course, I'm going to at some point, because I'm going to get into one of the other bullet points I mentioned earlier, which is different trading styles work in different market contexts, or whatever I said. But that was something that screwed me so badly, and it made me realize that what I am better at, because I was holding all these losers, and I'm like, well, I'm being patient. There's got to be some method I can make where I can trade these things, hold them, and still make money. So I figured out a way how to do that without holding things too long, still making profits, and really just swing trading any market, which is what I focus on doing now. Now, of course, like I said in a previous video, there are conditions in which um, I do not swing trade. Now that you have to know that too, because there are certain times, not many, but there are certain times where swing trading is not what you should do. Well, like for example, October 26th was yesterday. I didn't make a trade, so but I still think it's a good market for it overall for short-term swing trades. Not anything crazy, but taking a few overnight positions. But anyway, moving on. So leaning on the daily chart, that was huge. After I learned that I was good at being patient, I did a deep dive back into learning what I was taught when I first joined the option stalker community, which was look at the daily chart, trade the daily chart. Don't take trades that have a shit daily chart. Always look at the daily chart. Lean on the daily chart. I mean, oh my God, they say it so much. Maybe it even annoys you they say it so much. But it's true. For example, a novice trader might look at Nvidia and they say, well, it's a good company. It's a great company. Leader in AI, they're making money off AI. They make some of the best graphics cards in the market. They're getting into the CPU market. There's a lot of potential there. You know what? On a bounce, this could be a good trade. Maybe they buy it here and get fucked. Maybe they buy it here and get further screwed today. I don't know where it is. Let's look at this. Okay, it looks like it bounced but still, doesn't matter. And I'll tell you why it doesn't matter. It doesn't matter because this chart is bearish. Yes, we're still holding that gap up, but what does this chart look like now? Now, here we've got it's setting support here. We got to pull back to this level here. Buys off this level. Okay, nice. We got another level here. It comes back to test support. Still above this level. Okay. Uptrend continued. It's confirmed still. Then we've got, now it's fighting this level. Sells off from here. Oh, that's not good. Now that's no longer confirming the uptrend. And then the last signal we need to say that it's no longer confirming an uptrend is it breaks through this level, which it did. So despite the fact that it gapped up, like way over here, last earnings, and yes, it's still in the range of its all-time high, like this daily chart is not something I would buy on. Now, is it something I'd short on? No. I don't really feel comfortable shorting it for the same reason of why it's all the way up here. I would lean more towards shorting it than I would going long, but I would ultimately say that I'm leaning most towards like 90% doing absolutely nothing. And that's an option. Just because a stock has volume, just because it might look good today, doesn't mean it's a good trade overall. But anyway, let me not get too sidetracked. The point is, the daily chart needs to be immaculate, and this is not one of them. Let me pull up one that I was considering for the short yesterday. So Shopify. Here we've got a nice short. Now, this is what I talk about when leaning on the daily chart. So we've got a gap up here after earnings, which has been completely filled, and now we're selling below this compression back in May of this year. That's a significant sell-off. On top of that, what I mean by leaning on the daily chart is if I went short yesterday, which I didn't because I didn't feel good about the market, but let's say I did, that would mean, okay, this has been overall weak. I'm going to stay in that. Another good example would be Home Depot or Lowe's. I mean, I would say even a better example. Yes, it's coming up on support. That's why I'm not in it. But just for example, you see all this selling. This is oh my God, like it's heavy, heavy, heavy selling. I mean, we're going from prices at almost at 330 to now we're down in the 270s. I know that doesn't. I mean, some stocks move a lot more than that, but this is Home Depot and Lowe's. These aren't tech companies here. These are established brands that have been around for a significant amount of time that sell lumber and tools and equipment and faucets and sinks and everything. These are not companies that are, coming out with AI technology and, crazy things that create high volatility. So they move less. It's just how things work. But this is extremely weak. This is extreme selling. And if I was short here, if I was short here, 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 anywhere after this point here, or even after this point for truly, I would feel very comfortable sticking in the trade until I hit my target. Now, at any of these points, my target would be easily hit. But the point is if you, let's say, for example, you shorted on this breakdown right here. Let me move forward. Maybe it's not the best example because, like I said in my last hour some long video, I exit based on LRSI, so I would have gotten out. But let me use this as an example because, and I know what someone might say is, oh, you saw something that wouldn't work. So, well, look, I'm trying to give an example here. I do this shit every day. I see this kind of stuff all the time. It does work. I just need to give you an example of what I'm thinking of. So here's an example where this broke down here. Let's say you bought it on the breakdown and then it bought up from that level. Okay, a lot of novice traders will be like anxious about that because, okay, maybe they're down $5. Depending on how many shares you have, that's a lot of money. Depending on how many contracts you have, that could be a lot of money. Hopefully it's not. Hopefully you're still learning and you're not using a lot of money, so it's not a big deal to you. Even if you're using one share, okay, you're down $5. What is that? $5? Something like that, probably. Um, the point is that this is weak. We're down to the 200 SMA. I mean, even if you want to use technical levels as a stop out, I mean, the 200 SMA is a pretty perfect place to take the loss if you need to. Why panic? And sure enough, if you don't panic out of that trade, so that day closed on 306.49 and the next day opened at 304.52. I mean, that's perfect. And then it has a little bid check and then boom, falls apart. Probably hits your target that day, whatever it might be. So leaning on the daily chart is one of the most important parts of trading because it allows you to stay in good trades without worrying about getting screwed. So that was huge. Learning to do that, learning how to do that, and also learning, having like the mental game of like learning how to be okay with that. That's something I still deal with today. Let me give you an actual example. So I shorted Airbnb on this day, on October 20th. I was looking for 115. 115 was my target. I ended up changing my target, but that's not the point. Um, the point is that the next day, October 23rd, we had this big green bar. You think I didn't feel anxious? You think I wasn't upset? I wasn't struggling with that? My P&L did not look fun after this big bounce here. I did not like that. I hated it. I was pissed. I was like, are you fucking kidding me? This is like the most perfect breakdown ever. And now I'm getting fucked. But what did I do? What I did was this, like I said in my hour and some long minute video, I use LRSI to determine my exit. Never even ticked up. So I'm like, okay, I'm not touching it. Sure enough, yesterday it got down. I changed my target to the low of October 23rd because I was thinking like, you know what? It bounced off that area before. I don't feel particularly confident about shorting this market right now just because I just see a lot of things that aren't making me confident. I'll take gains at that low. Sure enough, it hit that low. I took gains. I was happy with the gains. I had no problem with those gains. So that's an example of a trade that I took that went against me, annoyed the shit out of me, but I stuck with it. That's the difference. Like a novice trader gets annoyed by something, gets anxious by something, gets worried about something, and then they panic out of it. Someone like me, I've been doing this for a long time. This is how I support myself. I don't panic out. I say my rules are my fucking rules. I'm sticking with the trade. And I did, and I profited on it. So that's what happens the majority of the time. Okay, moving on. Um, Holding too long has its own problems. Big key here. In the past, I've been a little bit of a bag holder. Before I learned how to lean on LRSI, I did a lot of my own technical analysis, which isn't bad. I'm very good at that for entries, but I found that I'm not the best when it comes to exits. Let me see if I can find a quick example here. Shouldn't be too hard. I just need to find a gigantic loss in my records here. So, Baidu. I have PTSD with these Chinese companies because they love to rally off bottoms. So, I shorted Baidu on May 24th. Right here, I was targeting this support zone. Now, this is something I did a lot in the past. I did less of this year, but I did a lot in the past. I took a $20 loss in this position. Where was I supposed to get out? I was supposed to get out right here. And retrospectively, obviously it looks like a good exit, right? And I don't even need retrospect. It tells me right here, June 1st, LRSI prints 0.53, whereas May 31st it was 0. So June 1st is printing 0.53. That tells me to get out. So at the end of the day, I'm seeing what it says. I'm seeing it says here 0.53. Why am I not out? Well, you know, at the time, I was still new at testing that method, and I didn't have the most confidence in it. But let me tell you, I've taken enough fucking losses that would have been a lot worse or a lot better doing it that way than the other way. So I took a $20 loss closing it on June 6th. Look at that. That's so bad. Right here, we've got to close at 130.79, and here we got to close at 137.45. Oh my God. How awful is that? That just makes you feel awful inside, doesn't it? Um, yeah, so that's just one example. I don't need to get into like 100 examples because it's just going to hurt me too much thinking about it. But you understand what I'm saying. Um, Holding too long is its own problem. For that reason, for big losses that shouldn't have been as big, and also for, okay, let's say you never close a loss and you know eventually it'll come back. Let's just pretend, right? You know eventually it's going to come back because that's not always true. But let's just pretend it is. Okay, well, then where's your money to trade with? It's gone. It's tied up in all these shit companies that you have big losses in. So now you're fucked. You're fucked multiple ways because you're fucked in the sense of, well, I can't do anything about this and I can't trade. So now I got to go back to my normal job. How dumb is that? Instead, you need to figure out a way not to hold positions longer than you need to. Trust me, that you have to, because if you don't do that, you will be suffering. You will not sleep at night. It's not good. Um, okay. So another thing that I learned is ignoring basically anything the stock does until I have to hit my profit target. That one is easy to explain. I'll even show you an example yesterday. Um, I'll show you an example. What did I do? Let me just pull it up here. Let me look at this trade. All right, here's an example. This is a good example. So I shorted MRNA on 1025. So I shorted it, I think over here, or no. I originally shorted it down here. Then if you look in the news, you can see that on 1025, there was some CBOE issue where options were all fucked. Basically, all the bids and asks were frozen, they weren't moving. So I ended up closing the trade for a profit because I was like, what the hell's going on? Like, my bid isn't moving, my ask isn't moving, nothing's moving. So I don't know how, but they still allowed you to sell on the bid, which is crazy. I'm surprised they didn't remedy that somehow. Um, and then I thought about it and I thought, you know what? This is a solid breakdown here, and I feel really strongly about the market weakness. This is on 1025. So as soon as it bounced off VWAP, I reshorted it. Now, as you can see from what it did the rest of the day, this is frustrating, right? But what did I say? One of my moments, my light bulb moments, was just ignoring everything until you have to exit for your profit or you have to exit for your loss. So as soon as I entered here, it just went da 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 da, annoying, 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 compression, bullshit, moving around, doing nothing that I want it to do. And this gives me anxiety. I mean, it's annoying. Like, you want your positions to make money right away. Who doesn't, right? But you know, part of learning this is learning that, like, okay, sometimes that's not going to happen. It's okay, but I'm just going to ignore. I'm going to completely ignore it. And then yesterday, it pulled back to around where my target was. It took profit. So it's no problem. Next day, it worked out. No worries there. So that's what I mean when I say that. Obviously, you have to pay attention to it if it's hitting where your designated loss is, because, like, what are you just going to be delusional? No, that you can't do that. So next point is certain styles work best under certain conditions. So I I used to think that I could just have a one size fits all thing. Now, I kind of still do that. But at the same time, I recognize when it doesn't work. Like yesterday. Just because I'm mainly a swing trader and I pretty much only take swing trades doesn't mean I'm going to do it on a day where it doesn't make sense. Yesterday, I don't believe made sense to take them. The market, sure, it was under the previous day's low, which if you watched my previous video, you'll know that's one of my entry requirements. That's one of my biggest entry requirements to taking positions. That's how I know I'm getting on the right side of the market. But the problem is this. We had so much selling lately. We're so oversold. And I was watching the 10-year yield just going down, 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 down. And I was watching IWM hold up the first half of the day. And I was just thinking, this doesn't feel like a market that wants to go down here. It really doesn't. Um, I just felt like there was a lot of reasons to stay out. And so I just said, okay, fuck it. I'm not going to make a trade. I was willing to if things felt right, but it just didn't feel right. So, um, you know, you got to know that when it's right to take certain trades and when it's not. I will say that there's few markets where day trading will not work, but for every single style, day trading, swing trading, scalping, there are markets where it's not feasible. Like I think scalping, quite honestly, has lost a lot of its effectiveness in the last couple years just because of the current market climate we're in. Like I think scalping was a much more robust and successful. I mean, it was very hard. It was always hard, but like it was a lot more. It was a lot better conditions for it in the past in these bull markets when you have these big moves. Um, it was just, I think it was a better market for it. I don't think it's as good of a market for it now. Okay, so finding errors through constant journaling helped me develop additional rules. So that's one thing is like, anytime you feel frustrated, anytime you feel like something you're doing isn't working, like, okay, maybe it probably isn't. Let's look at the journal, let's look at the trades, let's drill down on them, and let's just throw some shit at the wall. Let's see, okay, what if I did this? What would happen? What if I did this? What would happen? What if I didn't do this? What would have happened? Just like constantly doing that over and over and over and over and over again, and then testing that over every single possible trade you can look at, that creates immense understanding, immense knowledge, and it just ends up revealing to you a lot of things about your trading that you can easily, at least from a technical perspective, correct. Sometimes it's not so easily mentally, but that's a whole different animal. But that's pretty self-explanatory. Now, less is more. This is an important concept because in trading, a lot of people, well, just in general in life, right? When you're working a normal job, because this is most definitely not a normal job. So when you're working a normal job, what helps the day go by quickly? It's when you're busy. Being busy helps the day go by very quickly. Everybody knows this who's ever worked any kind of a regular job. Now, imagine well, I'm sure many of you have dealt with this. Let's say you're working at a retail job. You're working at, I don't know, a clothes store, and nobody comes in the store the whole fucking day. Oh my God, how long is your shift gonna last? It's gonna be forever. You're gonna be sitting there, standing there, most likely standing, and you're gonna want, I mean, you're gonna want to get the fuck out of there. It's gonna be the worst day ever. Because who wants to just stand there and be bored all day? But unfortunately, with trading, being boring is the only way to success. There are days where I take one trade the whole day. That's it. I make one single trade the entire day. Do you think I'm bored? Fuck yes, I'm bored. You think I love sitting here doing nothing all day? Well, I've created new ways of doing things. I mean, I'm at a point where I am pretty experienced at this, so I can kind of do random things during the day. Like you see some of my videos are literally in the middle of the day. I would not recommend that for novice traders. I would recommend spending as much time as you can journaling, reviewing things, and even sometimes I review things during the trading day while I still have the market open, looking at it, waiting for the right opportunity because I know what specific setups I'm looking for, so I can do that. But I would say for some people, especially people just starting out, that's not going to be what you want to do. You want to be staring at it as much as you can. Of course, I understand if you have a job, like you can't be staring at it all the time. But if you have a day off, stare at that shit all day. If you can't get a day off, then you look at that, you look at it, study it after you get off work, look at the whole thing, go bar by bar, and try to create your own analysis in your head as you're looking at it. That's all the stuff you got to be doing. But less is more in trading. As soon as I started taking less trades, you know, I'll just tell you, like, I have a 91% win rate for October. It's October 27th. We're almost done with the month. Um, you know, I I'm at a point right now where I don't really need to take any more trades for the month. I want to because I want to see if I can make some more money, but I don't need to. Um, but I don't want to let that get in my head either. This is all mental stuff. I don't want to let that get in my head either because then I might miss out. I might miss out on. It's like Harry from the option stalker room. He said to someone once. This was back when we were in a bull market. He said, "You are a business. What does a business close its doors when it's made enough money for the month? Fuck no." So, you want to internalize that kind of stuff too. But the less trades you make with higher probability, the better off you're going to be. If you like just take a shotgun blast to the market and just take a bunch of crap trades amongst your good trades, those bad trades are going to take down your profits. I mean, without a doubt. This game we play in the market is all about um, it's all about making the least mistakes possible. Because the more mistakes you make, I can just tell you right now, I'm at a point where I make maybe one mistake a month, maybe two. Um, and even sometimes my mistakes don't even net me losses. But in the past, I would make like 10 mistakes in a month, which is still not a lot. And it would cut my P&L in half of what it would be if I would make like even 3 mistakes or 4 mistakes. So it's very significant what it does. So I think understanding and making specific strategic choices and making very few of them is really beneficial. Okay, so my next light bulb moment for me in trading was realizing that being too rigid is actually just as bad as not having a defined rule set. So um, basically, what I mean by this is um, never making logical exceptions. So I'll just use the trade that I mentioned earlier, Airbnb, right? Now, retrospectively, we can say, okay, shortening up your target was the bad choice, right? Sure. It actually eventually hit my target of 115, so taking profit at like 115.40 was being conservative and unnecessary. Okay, fair enough. You could say that to me, whatever. Um, but the fact is that when you have when you have a target, it needs to make sense. It needs to make a lot of sense. It needs to be based on a lot of things. So, not necessarily a lot of things, but you know what I'm trying to say. It needs to be based in reality. So, if you have a level that you are designating as, okay, I'm thinking this is acting as support, then you get new information that's defined on the daily chart, that's confirmed on the daily chart that another new level is acting as support. If you just ignore that and say, well, fuck it, my original analysis is this, well, that might work in your favor and it might not. And why wouldn't you go with the new information, especially considering it's been thrown into your face? Obviously, it depends, right? Depends on the situation. But you need to be smart about this. Like, when you gain enough experience, you can start bending the rules a little bit. I don't mean ignoring rules. but I mean bending them. So changing targets, maybe sometimes not selling for a loss, sometimes holding on to it a bit longer than you should, sometimes. You know, it just depends. So it's tough to define this, but maybe here's what I would say for someone listening to this learning. When I say uh, be willing to have an open mind, don't be too rigid, just take that over time, internalize that, and just try to have strict rules, um, and then just analyze your trading and see what would have happened if you were a little bit more open-minded or a little bit looser in interpretation or more willing to change your mind based off new information. That's what I'm really trying to say, is because um, you want to be able to change your mind given new information. That's really what I'm saying. Like, I'm not saying like ignore a blatant rule that is is completely based in reality and everything. I'm saying try to have a slight willingness to try to have a slight willingness to change your mind given newer and better information. So the next point I have is over time you can trust your gut feeling because of experience, but it still needs to be aligned with technicals. So I'll give you an example of yesterday. My gut told me do not short. I posted in the Discord around 10 a.m. Yesterday, 10 a.m. Eastern time. If you want to go and check, I said, be careful shorting here. Let's look what happened. Let's pull up SPY. So around 10 a.m. I said that, I think. Now we had a bounce soon after I said that. That's what I was talking about initially. Now, it did end up selling off and then bouncing again. I still didn't short, and I'll explain why. So there's two things. One I can show you, and one I don't know the symbol for, so I don't think I can. But let me see. No, I don't know the symbol for it on here. I know what it is on. Actually, I should be able to bring it up. Give me a second here. Let me just make sure all my account information is not on the screen. Okay. Because I know what it is for TradeStation, I can show you. So this right here is the chart of the 10-year Treasury note interest rate, or other better known as some people call it, 10-year yield rate. So here was yesterday, between here and about here. We had continuously declining 10-year yield. Not only that, but I was watching IWM. This is the Russell 2000 index. Let me see, where is 930? So this is at the beginning half of the day. This is what it was doing. Just going up and just holding. Initially holding and then going up. What was SPY doing? SPY was pretty much heading down and then it had a slight bounce. So towards the beginning of the day, I was feeling like because of those two factors that possibly I should be cautious shorting. Not only that, but I am also considering seasonal strength that usually comes in around this time is so far not. But Pete, who is the creator of One Option and the method that I've built upon through my trading, he always says that he has a rule never to short during this period of time, which clearly I'm not necessarily listening to that, but I'm definitely taking it into account, and I'm definitely considering it in my everyday trading. Um, I currently have zero short positions on. I closed all of them yesterday for a gain. Um, and I was looking yesterday. I was certainly looking, but I just couldn't. I did not feel confident to pull the trigger, and that's just a gut feeling. So today's October 27th. It is only 10:25 a.m. EST. So there's a lot of time left in the market. A lot could happen. I have no idea what's going to happen today. And this video is not going to be going up today. So all of you watching have the benefit of hindsight to see what happened based on my gut feeling. Now, I still, like I said before, well, no, not still. Okay. So like I said before, I don't short unless it's below the previous day's low. So down here, and I go long above the previous day's high. So right now we're in no man's land. I'm looking at stocks. I'm noting relative strength, relative weakness. I'm making a list, but I'm not doing anything. I'm not going to make a trade unless I can get something convincing over this level or this level. Maybe if there's some parabolic move off news, I'll take a few points on that. But other than that, I'm not really going to be doing anything. Um, until we get a move in either direction. Even if we go below, I really need to feel confident. So that's what I'm talking about when it comes to my gut feeling. Yesterday, from my perspective, my gut feeling worked out because all the trades I was looking at, I'll show you. Um, I have to do it off memory because I already took them off my list for today because they weren't panning out. Actually, that's the only one that was working out. Let me think. CRM I was looking at yesterday to go short. Um, as you can see, I was looking at it down here. As you can see, that really would not be looking good today. I was looking at Shopify. Same situation. I was looking at it down here. It bounced and has not came back to that level. So not down too much if I was in it, but still down nonetheless. Um, Let me think. I just want to think of one more. What was I looking at? Let's look at TTD. Okay, so TTD is another one I was looking at. So clearly it gapped up and it's moving down, but still not close to where it was yesterday. So if I were to short any of these yesterday, even though yesterday's market on a technical perspective looked similar to my ideal setup, I had a gut feeling that told me, not really. It's not the setup I'm looking for, so I didn't take any trades, and clearly it's for the better at this time. I don't know what's going to happen later today. I don't know what's going to happen on Monday, but I'm going to position myself based on whatever I think is the best. And right now, I'm pretty much all in cash. So the next thing on my list is how to utilize the cloud. So I talked about this in a previous video, actually, but I just basically okay. So basically, I talked about this in a previous video, but um, SPY daily chart. It's the weekly chart. This is a view up from 1013. I'm just taking a look at it. 1013, 2022. So basically, like I mentioned before, I will not trade it when it's inside the cloud, or at least I will not swing trade stocks when it's inside the cloud because I can't be certain of market direction. Um, Now, yeah, this is, all of this right here below is fair game for me, but still I have to feel good about, the positions I'm taking. If I don't feel like it's high probability, I'm not going to take it. That's basically all I use the cloud for. I use um, what else? Oh yeah. For like a stock, like if I see that it's inside the cloud here, maybe I'll take gains at the end of the day, or I'll take gains, or maybe I won't even trade it, just for the same reasons that I won't swing trade SPY, just because when we're inside the cloud, it's a chop zone. It's not confirmed direction necessarily, but when we're above it, it's up direction. When it's below, it's down direction. So that's basically why I take a look at the clouds sometimes. I don't look at it that much, but I look at it enough to take note of these things that I'm mentioning. Um, the next thing that was a big moment for me was taking into account economic events. Now, economic events have become less volatile in 2023, but I can tell you right now in 2022, that was a major, major, major thing. FOMC, PPI, PMI, housing, jobs report, these are all major things that, had a significant impact on the market. You'd have swings in one direction, then the morning comes 8:30 a.m., and then boom, um, CPI comes out and it is hot, and the market reverses in the complete opposite direction. All your swings get destroyed. It's a very important thing to be aware of. And, in 2021, it didn't matter at all. In 2020, it didn't matter at all. In 2019, it didn't matter at all. And people didn't even look at those reports. 2022, it meant everything. So this is like kind of how changing conditions require different kinds of things to be aware of in the market. We're in a bull market again. I'll probably not look at any of these events at all. And honestly, right now, I'm barely paying attention to them. I'm only giving them slight attention, and I find that it doesn't even matter right now. So it's even mattering less again. So, things change over time, and you need to be aware of things like that. So, the next point I have is to religiously stick to your trading system no matter what you see another trader do. Let me take this off the screen. This is extremely important. Now, I can give a good example of this, not to say that I'm better than this person, not to say that I'm smarter than this person, because their profits are much greater than mine, and they're the one that taught me this. They're one of the people that had a big impact on my trading. So I'm going to give you an example. So Harry, really good trader. I don't know why I just typed in Harry. I'm fucking brain dead. He traded CRM before a news event. I don't exactly recall when this was. I think it might have been here. Let me double check because I can take a look at it. Let's see. I'm thinking it's around the beginning of September. Yes. Yes, it is. So Harry took, I think, 700 calls. I don't know. Something insane. Some absolute ludicrous position on CRM. And his thought process was that they typically rally into their news event, or they have some kind of conference every year, and they typically rally into it. That was his trading plan. So he took a massive loss on the position. He got fucked, which that happens, and that's truly unfortunate. I'm sorry that that happened to him. But I got in at the same time, but I used my own plan because it's my trade. It's not Harry's trade. Harry's not trading my account for me. It's my trade. So what does that mean? That means I don't give a fuck what he does. I agreed with the premise of the trade in that I felt it had established support over here, and I felt that because of the news, there was potential to give the stock an extra push. Otherwise, I wouldn't have taken this trade. I typically do not take trades where I believe there's overhead resistance. But I did in this case only because I felt that the news, potential news, could possibly provide additional support to fuel the stock. So, based on that, I said, okay, this is my target right here, 223.45. As soon as it hit that level, I took profit on all my contracts. That was my trade. Now, I made a nice amount of money on that trade. I was very happy with it. If I were to have just followed Harry, which, like I said before, he's had greater success than me. He makes more money than me by a lot. He has a couple years of experience on me, so he's more experienced. In any other field, copying your coworkers who are more experienced than you is a smart thing to do. In trading, you never copy another trader's trade. You can take the same trade they're taking. If you see someone say, oh, I'm taking calls in this position, you take a look at the position, you're like, you know what? I see how this fits in my system, and I'm going to trade it this way, and I'm going to ignore anything else they do from now on fair enough. Take the trade. That's okay. But if you say, oh, Harry's doing this or Dave is doing this, I'm going to follow them and I'm going to exit when they exit. Oh, no. That is so bad. And, like I said, I I don't know Harry's trading. I'm sure he could absolutely afford to take the loss he took. It was pretty hefty, but I'm sure he could have afforded it because the man makes money out of his eyeballs. I don't understand how. And that's another piece of it. If I don't understand, someone's trading system necessarily, why would I copy them? So, I'm sure that he made back that loss no problem. But me, if I had followed that trade and taken that trade and done exactly as he did in that trade, that loss would have taken me a while to recover. It would have been pretty brutal for me. Mentally, it would have been hard too. But I didn't do that. I just did my own system, took my own gain. I took my gain 3 days before, or 4 days before Harry took his loss. Um, you know, I, is what it is, right? But that's my whole point. You have to religiously follow your own system. You have to have your own criteria, your own exits, your own stop area where you plan to take your loss if you need to. You cannot look at another trader you consider to be good, or even, I mean, Harry is good. He's a great trader. I mean, I think J.P. Morgan said that he was by far the most successful retail trader in their entire system. So, I mean, that's pretty fucking impressive. But you know, it all comes down to what is your system? Because your system works for you. You have to know that. So don't fucking do something stupid and listen to someone else when you don't even know their system. So you get the point. Um, so this is another big factor. We're almost to the end. I know this is getting longer. Probably going to be another 40 or 50-minute video, but at least it won't be a 2-hour video. So experience changes everything. So in the last couple months, I was made into like a proven trader or whatever it's called, the gold traders in the option stalker room. Um, and it's not like the reason why that happened is like something that just dawned on me recently. It's been something I've been doing for a while, and it's simply that I can read the market like a book. It's very easy. Like let me show you. And this is experience. This is constantly reading what other people who know better than me are saying. This is a lot of things. So here we have the market selling off. So what are you thinking here? I already outlined a lot of things of why I didn't get short, but let's look at this inside of a vacuum. Let's not look at anything besides the market. And, truly, if you did take some real relative weakness shorts, like low, you were fine today. Or Home Depot, you were fine today. It was just that my picks yesterday weren't that good. Clearly, they're not doing very well on the short side, and I'm not even in them, so we're good. But okay, so here we have the selling off here. It's like, okay, well, let's see what happens on the bullish cycle. Okay, it had a little bit of a bounce above VWAP, immediately sold back off or back at lows. Now we have a cross down. Okay, I would short right there. I would. Below the previous day's low, we tested the upside. We could not even close the gap. Just think about that, right? This is a gap right here, from here to here. We never even tested it. We never closed it. Well, I mean, I guess you could say we tested it, but we didn't close it. We never closed it. Still hasn't been closed. So this bearish cross here was a really good shorting opportunity. If you took that, you probably made money. And then we have another bullish cross. So you wait. Another bearish cross. This should have been good, but it wasn't. It happens from time to time that a bullish cross, if you're day trading and you get this, you're taking gains here on your shorts, or you're taking the loss. Say fuck it. And then, yeah, I can read the market like a book. I couldn't do this when I first started. I couldn't say, "Oh, here's AVWAP, here's this, here's that. This is probably what's going to happen. Here, I need to wait for this. I need to wait for that. I need to see if this sets up." I didn't know any of this. I didn't think about any of this. So when you get to a certain point of experience, you don't need anyone else saying, "Oh, be careful shorting here. Oh, be careful with your longs here." This shit's all happening instantly in your head. Like, I'm verbalizing all this right now to you, but I look at this market here, and in 1 second, I already know what I want to do, which is nothing. I can tell you right now, this is chop, 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 chop. We have a bear cross. Basically does nothing. It just is consolidating. Now we've got this turn. Now these have to cross up, sure. But like this is crossing, you should wait. Yes, you have this crossing down. Yes, you have this crossing down. So you have other things working in the bearish favor, sure. And that's why you're seeing additional bearish pressure here. But, it bounced off from that yesterday. It consolidated not much lower than that. Really bounced off this level. So why take a short? Plus, we're not even below the previous day's low, which I know is my personal condition, but um, you know, it's it's instantly clear to me not to take a trade. But, that comes with experience. So another factor that I want to just go over really quick. I'm not going to necessarily give too many examples of this just because it's difficult to do so, but I'm just going to explain the logic. So I think when you're learning, uniform position size is good. Um, and when you eventually size up, I think you need to change things a little bit. So basically, when you're first learning, it's good to do the same position on everything because then you really don't have to think. Um, and it just makes sense. If you have really, really, really small size, it doesn't really matter that much. And you can kind of like in your results, like really look at it and understand like, okay, am I actually doing good or am I actually doing bad? The P&L might not necessarily reflect it just because, you know, taking one share on like trying to think of like a mid-range stock or like even a low price stock. Like let's say taking one share on PayPal and taking one share on Nvidia, um, you're going to have a drastically different P&L on both of those trades. Even across many trades, it's better in a bull market to have uniform position sizing. Not necessarily, but like it's better. It'll create better results just because you're going to have a higher win rate in general, and also the there's going to be more trades taken, which will negate some of that larger position risk. But in the case of this market, it kind of is going to fuck with your P&L a little bit. So that's why I recently sized up pretty significantly actually, and what I did is I did a tier system where I did less contracts for every level up I went. So the most contracts I run are on the lower price stocks, and the least contracts I run are on the higher price stocks. So um, I tested that, like I've said many, many times in this video and the last video. I tested that across over 1,000 trades just to see what it would look like, and yeah, it was really, really, really nice. So I implemented that in real time, and yeah, this month has been good. It's been really good. So I really think that's beneficial, and I've seen it happen. Like I took one contract on a position that was like 400 some dollars a share, and the profit was nice. And I took like I'll just say it. I took like 5 contracts on a position that was less than $50, and you know like for example, the $400 position will give me like a $2 or $3 move, and the 50 below $50 position will give me like a 30 or 50 cent move. And both of them were nice. And I saw it on the opposite end too on losses, where I took a one contract loss on something versus have I had any losses that were greater contracts? I'm not sure actually. Let me take a peek. I had one, but it was out of the money, so it doesn't really count. Yeah, no, I actually have not taken a loss yet on a position that is greater than one contract. Um, I guess I will have to see what that is when that happens, but so far that I haven't taken any losses yet on or I haven't had to. It's not that I just haven't taken the loss. It's like um, I'm out of all my positions, so I haven't had to. I haven't lost on any of them yet. But anyway, I do think that you do need to do that when you size up, just because if you have one contract on, like I said, PayPal, and you have one contract on Nvidia, it's just going to be so different. I mean, I just can't see a world. I can't see a world in which that pans out in the way that you're looking for. So anyway, I hope that is clear of why I did that, and it drastically changed my trading. So in the most positive way possible. So and here the final thing I want to go over is the how you need to understand how options and shares can be utilized in the most efficient way. So with this method, on the Reddit and in the Discord, people talk about how you need to start trading with one share after you paper trade to get an idea of how the live market works and make sure that you can have good statistics on one share. That's 100% true. I agree with that 100%. So after you're done with one share, after you've proven that your stats are solid, what's the next step, right? Next step is adding additional shares. So you're going up in shares, and let's say you're using my method, right? Because I'm talking about my personal experiences. So this is why it was a light bulb moment for me, because I got up to using like 100 shares on a lot of positions. So once I got comfortable with that, I said, okay, well, you know, even with margin, I can't really afford to take more positions. It's I don't have the money. I don't have the money to swing. You know, greater size positions. I just don't have the money. So I thought about it and I said, okay, well, I guess I have to learn options. And they say in the Reddit to start with one contract. So I'm like, okay, I'll start with one contract. I learned the nuance of options. I learned how delta worked. I learned how, when you have a 0.75 delta, which is about the average of what you should have. You're not gonna get a one for one move on your contracts. So you know it is what it is. It's just a thing. So I thought about this. I said, okay, how do I differentiate? Because now I have extra money, right? Now I have, since I'm not using contracts, my capital restrictions are brought down dramatically. So how can I put this money to work? Um, wanted to figure out how I could use the rest of my capital to try to make money. So I thought about it and I thought, okay, you know, there's day trading and there's swing trading. And like I said before, I'm mainly a swing trader, but I want to learn more and perfect more my ability to day trade because I think it is lucrative and I think, there are opportunities to day trade that, you know, are what's it called? That are there are opportunities to day trade when there are not necessarily opportunities to swing trade. And so I want the ability to do that. So, okay, I thought about that. I'm like, okay, well, you get 4x margin on day trades. You don't get any margin on options. So I thought about that. I'm like, okay, well, I guess it makes the most sense to day trade with shares. Because if I'm day trading, if I'm making sure I'm closing this at the end of the day, I can use all this margin that I wasn't able to use before. Because remember, I was mainly swing trading, so I know I can only use my overnight margin, which is only 2x. So I'm getting an additional 2x. day trading. So it's like, okay, I can work with that. So now here's what I learned. I learned, okay, options are for swinging because less capital tied up for a longer period of time. Sounds great. And shares are for day trading. I barely ever make day trades, but that is my plan, and that's how I utilize it. So anyway, that is the end of this video. I hope that, kind of going through, I would say some of my biggest things I learned that made a huge impact on my trading was something, helpful or at least entertaining for you to listen to, and I hope that this could be beneficial. So trade well. I'll have part 3 out sometime eventually, but that's going to be what I'm working on next. See ya.